something is happening right now that has never happened before. This week, three of the most powerful companies ever created are preparing to go public on Wall Street. At the same time, in the same month, in the same window, the headlines are calling it the biggest IPO wave in financial history. And for once, that's not an exaggeration. We're talking about OpenAI, the company behind ChatGPT, used by nearly 1 billion people every week. We're talking about Anthropic, the AI company that's somehow valued even higher. And we're talking about SpaceX, the rocket company that quietly became something much stranger than a rocket company. Together, their combined valuation sits somewhere close to $4 trillion. To put that in perspective, $4 trillion is roughly the size of Germany's entire economy. Except instead of an entire country, it's three companies that went public in the same month. But here's what nobody's saying out loud. These companies aren't just going public because they want to. They're going public because they have to. And once you understand why, the entire story starts to look very different. Let's start with OpenAI. You know the name. ChatGPT crossed 900 million weekly users earlier this year. Their revenue grew from roughly $2 billion in 2023 to over $25 billion today. That is extraordinary growth, almost incomprehensible. Except there is one problem. For every single dollar OpenAI brings in, they spend $1.22. The more successful they get, the more money they lose. They are the fastest growing company in tech history. And they are burning through cash faster than they can count it. And they just filed for a $1 trillion IPO anyway. Now meet Anthropic. You might not know the name, but you've probably seen their product, Claude. Their AI assistant has quietly become dominant inside enterprise software. The AI that companies use rather than the one consumers talk about. In May 2026, Anthropic announced its revenue run rate had hit $47 billion, up from $10 billion just 12 months earlier. And their valuation, nearly $1 trillion, higher than OpenAI. Two companies, a combined valuation of almost $2 trillion. Both losing money, both racing to Wall Street before the other gets there first. Then there's SpaceX. And SpaceX is where the story gets very strange. Most people think of SpaceX as a rocket company. Elon Musk's ambitious Mars project, reusable boosters landing dramatically on drone ships in the ocean. Impressive, sure, but niche. That is not what SpaceX is preparing to take public. Earlier this year, SpaceX merged with xAI, Elon Musk's artificial intelligence startup that produces the Grok chatbot. Then it absorbed X, formerly known as Twitter. The result is something that has never existed before on public markets. One company that controls a satellite internet network, a rocket fleet capable of reaching space, a social media platform with hundreds of millions of users, and an artificial intelligence system competing directly with ChatGPT. One company, all of it. Their target valuation, $1.77 trillion. The single largest public market debut ever attempted in history, larger than any IPO ever recorded, anywhere, by any company. Here's where you need to pay close attention, because the numbers involved are almost designed to be confusing. The entire U.S. public market raised just $45 billion in IPOs across all of 2025. Every company, the whole year, combined. That was considered a reasonable year. OpenAI, Anthropic, and SpaceX expect to demand more than $200 billion from investors over the coming months. That is more than 4 times what the entire market raised last year. So where is the money coming from? And why would anyone pay it? The answer is the same reason people bought land during the gold rush before the railroad arrived. Not because of what these companies are today, because of what they might become. OpenAI's CEO, Sam Altman, has publicly declared a target of $100 billion in revenue by 2027. That is 4 times their current run rate in just 12 months. If he's right, $1 trillion valuation looks cheap. If he's wrong, it looks like the most expensive mistake in Wall Street history. Anthropic recently announced it was on track to post its first ever operating profit. approximately $559 million in the second quarter of 2026. For a company burning this much capital, that's significant. It means the math might actually work, eventually. But eventually is a very dangerous word when you're asking investors for hundreds of billions of dollars up front. There's something else happening beneath the surface. Something that explains why all three companies are rushing to market right now. In the same window, in the same month. They need the infrastructure money, urgently. AI doesn't run on clever algorithms alone. It runs on physical hardware, on data centers, on electricity, staggering, incomprehensible amounts of electricity. One analysis found that up to 50% of planned U.S. data centers may miss their 2026 completion targets because the national power grid simply cannot supply power fast enough. SpaceX's Starlink is expanding aggressively. xAI is building data centers the size of small cities. OpenAI is investing billions in its own compute infrastructure. Anthropic is scaling cloud capacity at a rate that would make traditional tech companies nervous. All of them need capital. More than venture capital can provide, and going public is the fastest way to access it. This is the part the financial press tends to miss. The AI arms race isn't just about who has the smartest models anymore. It's about who builds the physical infrastructure fastest. Whoever raises the most first builds the most. Whoever builds the most wins. Which means this IPO wave isn't a celebration. It's a race for survival. So what does this actually mean? Not for markets, not for investors. For you. The person currently paying $20 a month for ChatGPT or using the free version of Claude. Here's the uncomfortable truth. Right now, those prices were set during a period when both companies were privately funded. Burning through venture capital, with one single goal: grow at any cost, acquire users, worry about profit later. Once they're public companies, the calculation changes completely. Public companies have quarterly earnings reports. They have shareholders demanding returns. They have analysts dissecting every number every 90 days. The subscription price you pay today was never designed to be permanent. It was designed to get you in the door. The door is about to close, which means the AI tools you currently rely on for work, for writing, for research, and for ideas are almost certainly going to change. More expensive tiers, more limited free access, ad-supported versions, enterprise pricing. The full commercial playbook applied to tools you've come to depend on. And SpaceX? When a single company controls your satellite internet, your rockets, your AI assistant, and your social media feed simultaneously, the questions about power and access become very uncomfortable. We are entering a week that financial historians will write about for decades. Three of the most consequential companies in modern technology, going public at the same time, with combined valuations that would have been considered impossible 5 years ago. The question isn't whether this moment matters. The question is whether you understand what you're actually investing in, or what you're about to lose.